Hey, everybody. Welcome to the Real Job Optional Freedom podcast. I'm here with my co host, Kevin Gilbert.
Hey,
I'm Chris
everybody.
Bell, and today we've got a special guest for you. It's actually Kevin, our co host. We're going to be interviewing him today and finding out more about his journey and some of the things that he's done and been successful with, and probably equally as important, some of the things that maybe have not gone so well and some lessons that we can learn. Um, so, for those that don't know, real estate can be pretty complicated. Let an investor guide you. We are here to demystify the complex nature of real estate by getting you answers from professionals who are in the trenches so you can be the hero of your real freedom story. Welcome to Real Money. Without further ado, Kevin, it's great to have you on, and I'd like to just start with a little bit about your background and what are you doing these days?
Yeah, this is kind of exciting. Little credentials. Been doing real estate for, let's call it 20 years. So, we've seen some market cycles, accumulated a lot of properties. Some are in multiple companies with shared ownership, but in general, I think there's somewhere around 72 to 75 properties. Uh, we're franchise guys. So there's been a lot of projects over the years, but the beauty of the real estate is, it is passive stuff if you do it right. So it's fantastic.
That's awesome. And you mentioned you've been doing it for 20 years. Kind of uh, take us back a little bit. What what were you doing before you got into real estate, and maybe what inspired you to get involved in real estate?
So I was actually in college for computer science, and if you're old enough, you look back on computers. When I was a kid, computers were really programs written by two guys in a garage, and it was really innovative and really creative. But by the time I was in college, we were seeing the 1999 college, the internet boom, right? Everything was going crazy. And I'm in college and I'm picturing the rest of my life as one of 200 people in a cubicle farm somewhere. You ever seen the Dilbert cartoons? I was picturing myself in a Dilbert cartoon. And my mother was watching Oprah, and I'm in a funk, and I happen to walk through the living room, and she's Oprah is doing the Book of the Month Club, and it happened to be a real estate book, and I devoured it. I changed majors. I just got really excited about it. The idea that I could receive income or money by something I did once, a property I purchased once, and then it paid forever. I just love the idea of that. So it got me really interested in investing and got me interested in the concept of not trading time for dollars and not having income tied to a job. So
Man, that's awesome. Love to know what book it was. Do you remember?
it was it was one that started a lot of people in real estate. It was called Rich Dad Poor Dad by Robert Kiyosaki.
That's awesome. I think it's so interesting. So many people got their start in um, real estate or possibly even business by reading Rich Dad Poor Dad, and it's interesting because it's not specifically a real estate book. It's just really like a mindset. Um,
It really is. When you think about a lot of those books, they don't tell you as much how to do it as to why to do it, and that's the important part. I think. With Google and the internet, you can find a lot of answers to how tos. People really need is a why, and if your why is big enough, you'll make change. If it's not, you don't leave your comfort zone, right? So
Absolutely. That's really exciting. And you start down this path of real estate investing. You had never done it. You read a book. Like I'm assuming, like, did you have money? Did you have connections? I mean, how did you go from, hey, I'm the guy who read the book, I decide I want to do something different in my life, to now the guy who's in multiple partnerships and, 50, 60, 70, 80 rental properties? Like, how did you that first step, what was that? What'd that look like?
So again, I was a college student, right? So I was living at my parents' house. So your overhead's already low. You're a college student, so you're used to living broke anyways. Basically, I just continued that pattern for a little while, right? So every dollar continued to go into, you're reinvesting and trying to get the snowball bigger and get it moving, right? So that was the real answer is I just kept the overhead low to keep the snowball going. But over 20 years, you meet a lot of people. One of my favorite people I met that does this was a guy who was a garbage man. He was a sanitation engineer for 20 years, and he owned 20 houses, and he was a millionaire. And I loved it so much because it's one of those things where if you're living below your means and doing all your finances right, anybody can do it, even the guy picking up your garbage. So.
Wow. So do you remember the first house you ever bought? Do you still have it?
Yeah, I still have it. I went crazy and bought two at the same time, and they were right next to each other. And to this day, I call them the twins because it's the same layout, it's the same house, and I still got those houses. So it's the first ones I bought, and you know, it's interesting to see because I kind of bought those like the market was going up when I first started, right? And so I bought those and I felt real good about them for a couple of years. Then we saw the 2008 crash, and then I felt real bad about them, and now I feel good about them again, right? But the interesting thing is that's all emotional because I never sold, right? So the houses consistently generated a fantastic return if I ignored all the valuations on if I had sold, right? So you're watching rent come in every month, and they're bringing you money every month, and appreciation is fantastic and everything, but I really love the cash flow on those houses, and those were the first ones. I've sold some. I'm selling a house tomorrow, but I mean, I love this stuff, and it's all about that passive income for me. The idea of just, you know, a friend of mine once said, I could spend all my money, and on the first of the month, you go to the mailbox and there's more, right? So I love that idea.
That's great. That's great. So, do you primarily invest in multifamily, single family, commercial? Where are you uh, putting your money?
So I think that's a personal preference and comfort zone, right? So it depends on your strategy. If you're getting loans from the mortgage bank and you're using property managers, it probably doesn't matter nearly as much. If you're looking for deals and you're not working a full-time job, you can find some real good deals in the single family space, right? People get scared off on the house is full of bugs, the house, there's certain things that just scare people away that are actually cheaper to repair than you would think, right? So say the house is worth, I'm making easy numbers, but say the house is worth $100,000, but it's full of bugs, right? You can actually get rid of the bugs for fairly cheap, but get a huge discount on the price of the house. And why is that? It's because it's not really about the real estate, it's about the people involved. Um, Houses are big deals, right? For some people, they're the largest investment they have in their entire world. And it can be emotional. It can be a blessing or a curse, depending on where you are in life. It has nothing to do with the house. It just has to do with people's living situations, their family situations, what good and bad things they're going through in life. So I like the single family because I can find them at a discount on purchase. But if primarily you're going through mortgages and primarily you're doing, offhand stuff, and you have a real job. Say you're a doctor, right? Your time is more valuable being a doctor than it is going and looking for a house, right? So you might want to just pay retail and do it as hands off as possible and wait out the clock, right? So 30 years later, your mortgage is paid, and you do that 10 times, you got a couple $1 million in real estate before you even know, before you even realize it. So I
Awesome.
think they're all great, but primarily I'm in single family homes just because I can find discounted properties there.
Great. So, do you, being in the single family market, are you primarily looking in one geographic area? Are you um, like, I guess, diversifying, putting investments or money to work in other markets? Like, what's your take on that?
So that again is part of your comfort zone. In this, well, it's a new year. We're in January, but last year I think I purchased five houses that I've never actually been to. Right? If you're buying your first house, you're not doing that, right? But if you have a hundred houses and one house is a house you've never been to and it goes bad, it's a 1% problem, not 100% of your problem, right? So I think everybody's comfort zone is a little different. A friend of mine just bought a house in St. Louis, I think yesterday. So that's exploring outside the market. Um, I don't know. I mean, I haven't really purchased them long distance. Some of these houses are an hour away from me, and I'm renovating one right now, probably 40 minutes away. I've been to the house once. Everything else is pictures and videos. So I don't think I need to be local. I don't think the house needs to be local, but I've also not ventured out there. I think everybody's comfort zone is different, right? If you're in New York City and you got 100 grand, 100 grand might buy you two or three houses somewhere, but not there in New York City, right? So
Yeah.
I think it's different for everybody. The comfort zone and risk associated with that is everybody is different for people, but you also got to look at like how emotionally tied to it are you, right? Some people some people are handy and they want to be able to go there and fix the whatever themselves, right? Some people are, we go back to that example of the doctor, right? The doctor's not going to go out and fix anything himself. His time is way more valuable being a doctor. If you got $100 repair, just take care of it and move on. So
Yeah, absolutely. So, you've done a lot of real estate. Um, you read one book. You've done hundreds of deals now. Uh, where are you getting your education from? Is it through books? Is it through seminars? Is it through mentorship? Like, where are you learning how to do the craft of real estate investing?
so real estate investing is probably like every other craft. There's continuing education, right? And the answer is all of the above. I probably on the topic, I read a lot. I'm a heavy reader, but I'd probably say 1 to 2 books a month are real estate related, business related stuff. And you're gonna know 99% of it, right? I go to seminars, and again, most of it is regurgitated information that you already know, right? So you hit a certain point where you know what you're doing and you're in your comfort zone now and you're moving forward. But every once in a while, I remember there was one seminar, it was 3 days, and we got one idea from it, right? So just one little idea. And the rest of the 3 days, was stuff we already knew, and you're bringing it front of mind, right? But probably generated $30,000 a year, and it's been 7, 8 years now, right? So you talk about, okay, I went to a seminar, I spent $3,000, hotel, airplanes, and that idea is still generating dollars now because it was an idea. But I also love the front of mind stuff, right? Like there's certain things that you it's easy to get distracted in life, right? Everything from friends, family to drama to whatever, and you start focusing on your goals, right? Um, are you thinking about next week, next month, next year, 5 years down the road, 10 years down the road, or are you thinking generationally, right? And usually the guy who wins the biggest is the one thinking the most long term in all categories of his life, right? Finance, family, everything, dating, right? If you're thinking more long term, you're probably going to win bigger than the guy who's thinking about, next week. So it's everything. It's books, it's seminars, it's networking. You want to surround yourself with people who are accomplishing what you're trying to accomplish. If you're the smartest guy in the room, you're probably in the wrong room. So.
Yeah, amen. That's a goal of mine is to not be the smartest guy in the room, and I can achieve that often, and it's really helpful because it's amazing how much you can learn from people that have been there, done that, and you know they you know they have the T-shirt.
Yeah,
Um,
yeah, yeah.
so that's really cool. What's something that basically everybody in the real estate investing industry maybe should start doing or should stop doing that you see from like you're doing the networking and you're around all of these folks, what is something that they should either start doing or stop doing?
Hmm. That's a tough one. The people in the business, you know, I mean, they got a good handle on it. Um, the thing about real estate is when you're surrounded by investments of any kind, is that you become mentally an investor, right? The hard part for me is people who are not investors. I feel like they need to get in the game, right? They need dollars on the table, right? You'll see the stock market is a big one. You'll see people talk about all the time that the rich are getting richer because of the stock market. Well, the thing is yeah, they're playing in the investment space, right? So the people in real estate who are making the money are the people who are accumulating and acquiring more real estate. So I have a sister who's a doctor. I have a brother who's doing, fantastic financially, but you know, um, you just win bigger the more of these houses you get, right? It's not your time and energy that are making the dollars. So if I was to say anything, I'd say, um, you know, I don't have advice for the real estate people except the ones who are acquiring properties and focusing on the houses more than the dollars and the transactions. They're going to win bigger because they're thinking more long term. And for everybody else, it's almost like, I want them to win financially, and it's hard to do that without them, buying a ticket to the game, right? If you don't have a stock portfolio, if you don't own real estate, it's, every time inflation hits or every time appreciation hits, you don't see those gains, right? So every time the market goes up, you're just left out because you're not playing the game. So,
Yeah, it's really amazing how fast your education ramps up when you put dollars on the table. You literally go from um, almost this I read a book, I've got an idea to expert status, whether you win or lose, right? Uh, because you put money on the table and you are forcing yourself to learn that craft because nobody wants to lose money. Like,
let me give you a wonderful example on that. In college, I had a class where they taught you about stocks, okay? And paper trading. Paper trading is basically you have a computer and you're doing, let's pretend I own 100 shares of whatever stock, right? So, paper trading in school, they're like, all right, your goal is to beat the average, right? And at the end of the quarter, if you beat the average, you get an A. And if you don't, you get a, F. I don't know. But I found it really interesting because, okay, you're thinking about trying to beat the market, you're trying to get a return, but it's all fake, it's all pretend, right? After college, I for the fun of it, I mentally thought of it as like gambling money or fun money or intellectual money, just something to educate myself on stocks with. But I opened an account with like 10 grand. And boy, once dollars were on the table, your attention and what you learn just goes to the next level. Like it's not life changing money. It was $10,000, but boy, you stare at it way different than you do when it's paper trading, right? When it's pretend money. And so that's a great example you were talking about. Is like, man, you put a dollar on the table, suddenly you care about what's going on way more, and you're way more focused, and that has nothing to do with the account. It's all has to do with our mindset, right? Um, the goals we focus on are what we become experts in, and things that we excel at, right? If you have a kid, you're going to become an expert at certain things that people without kids aren't going to be an expert in. If you own real estate, you're going to become an expert in things that other people don't even know the lingo. And it's what's the difference? It's all in your mind. So the things you focus on are always the things you win at, right? And if you're focusing on your job, you're probably gonna get good reviews and raises and do better there. But you got to remember to also focus on your family and your future. And I think a component of that, not the whole pie, is definitely financial future, right?
Yeah, absolutely. What what would you say is one of the biggest lessons that you've learned in the past 6 to 12 months that's been really impactful for you? Um, whether that's monetarily, education, um, what would you say?
So, okay, I've had an interesting. We're talking at the we're 2 years into COVID times while doing this, right? So, a little more background on myself is I got married in February of 2020. COVID started March of 2020. So I'm having an interesting 2 years. But this last year, we also started doing foster care, and that's been really rewarding and it's been very enriching and also educational, right? Like I've learned a lot about uh, people and giving and a bunch of other things. But one of the big things I've been focused on this year, so it's been a busy year, everything else, but in real estate, I've been really focusing on the power of time. Like, we're having a lot of appreciation the past year. Everything is going up in valuation, right? And everybody understands what when prices go up, your house also goes up in price, right? But it's interesting when you think about you have a mortgage and the mortgage stays at a fixed cost, right? So you're basically paying. It gets a little complicated here, but basically you're paying back money you borrowed last year with cheaper dollars this year, right? And that's arbitrage. That's leverage. You're really, that's been my focus this past year of just recognizing that time and the way the market goes has a huge value, and it's not just in watching things go up and my returns increase. It's also recognizing that at these interest rates, even if the market corrects on a cash flow basis. I gave you an example of that first house I purchased that I still have, those two twins. Um, if the rents keep going up, I don't really care what the house is valued at until I plan to sell, right? So that's been my big focus this past year. Basically, just you know, if you're looking for words to Google, it's arbitrage, leverage, and uh, the power of your investments, right? That kind of stuff.
Yeah, I think, even to this day when we're recording this, you know, the the interest rates on a 30-year mortgage are at historic lows, like likely the lowest they've ever been. I think the 200-year average of mortgages is like a 5.25%, and we're somewhere in the threes right now. And smarter people than myself are basically saying it's negative interest rates when you take into account what the stated CPI and the consumer price inflation index is versus what you can borrow the money for. So, you just think about that. If the inflation that's stated by the government is 6%, but yet you can borrow money at 3%, you're making a positive 3% right from the jump. Uh, and being able to leverage that into real estate. And it's like a
Yeah,
almost a
and you
guaranteed
think about
return.
yeah, but you also think about the assets people will lend you money on. Um, Real estate is one of the biggest ones. They'll lend you more money on real estate than they will on anything else. Than they'll lend you on your stocks, more than they'll lend you on anything. So it really pays to just get in there, and real estate is one of my favorite assets for that stuff.
Yeah,
So
because when you go to the bank and you say, "Hey, I want to buy $100,000 worth of Apple stock," the bank doesn't give you $100,000, you know. But if you go to the bank and you say, "Hey, I want to buy, you know, this $1 million property," like they'll lend you $900,000 on it. You've got to come to the table with, 10, 10, 15, 20%, whatever the lending terms are. But it's amazing the power of leverage on
Right.
real estate.
Yeah. I mean, you can find a million examples of it, but you're like it, the power of arbitrage and leverage, man. That you buy that $1 million of real estate, it goes up 10%. You've in your example, you borrowed 900,000. If you're not seeing any cash flow, like all the money coming in is going to rent that first year, but the property goes up 10%, you doubled your money, right? It went from 1 to 1.1. Your contribution went from 100,000 to $200,000, right?
Right.
So that's fantastic. But I've also talked to investors who I remember the first investor I ever talked to was a construction guy. And the reason I found out he was in real estate was that the accountant at the construction company would yell at him all the time, going, "I need you to cash your checks. You're ruining my books. I need clean books. Please cash your checks." And what he was doing was he'd take them and he'd throw them on the dashboard of his truck and forget about it. He'd be like, "Oh, okay, I'll go do it," and he'd go cash 3 months worth of paychecks at one time. And I went and said, "What? How are you not cashing your paychecks?" He's like, "I don't. I really like this job. I like doing construction, being involved with big projects. I don't actually need the money." I said, "How does that work?" And he said he had 20 properties. Um, and I asked him for advice. One of his pieces of advice was, you know, 20 years down the road, he's like, you know, I saw no point in paying him down if I just got an interest only mortgage. Now you got to remember, I'm talking to this guy in the late 90s. So we hadn't seen the 2008 crash or anything like that. But he was saying if I just done interest only and only paid, never paid the balance down and just taken the cash flow between appreciation and cash flow, he'd have been doing fantastic. And I was a kid at the time and I found that really interesting. So, you look at an investment and 1 year in, you're like, okay, it appreciated, I got value, but I'm not seeing any cash flow. But when you think about the long term, 20 years down the road, right? It's you look at prices 20 years ago, right? A house selling $200,000 right now. If you had paid full price 20 years ago, you'd have gotten it for $60,000 or something, right? Just full price. Um,
Yeah.
it's and then the rents go up, right? So 20 years down the road, your rents have increased. Inflation and the value of the dollar have all worked to your advantage because you leveraged and purchased an investment property, right? So
Yeah, I think a lot of it boils down to, just going through the 2008 crash and, living through that with real estate investments. I'm just reminded over and over again that you make money when you buy real estate. That's when all of the numbers, all of the math has to work. Basically, it's when you buy it. If you if you buy it right, it doesn't matter what the market's doing, up, down, sideways, you know, rents
and
up, down.
the longer you play, the bigger you win, right?
Yep. So that's
Yeah.
awesome.
And the
So
more you play, right?
we've talked a little bit about real estate and kind of your story and your involvement in real estate. Tell us a little bit about some of the franchises that you've been a part of over the years. I can think of two or three right now.
Yeah. So it's actually been three franchises, and one was the first one was 2008. The entire world was suffering financially, and we found out a local franchisee was doing really good, and she had no experience in real estate. She was basically a franchise lady. She had Great Clips, I believe. So she had a bunch of franchises, and she was just looking for her next franchise. So she went to a franchise show and found one related to real estate and got involved, and she was killing it. And she had like 8 months of real estate experience, and we're all dying, right? The whole world's dying. And I said, I got to find out what's going on. So we signed up, bought the franchise, and right away started doing fantastic. So I'm a big franchise guy now. I'm no longer involved in the first two. One we did for 10 years, one we did for a few years, and then the one we're involved now, I think we're going on year 12, I think. So
Awesome. So you like franchising? Is there? Can you give me some reasons why maybe you're a big proponent of franchises? Have you ever um, done a business that's not a franchise?
Yeah, yeah. So I have a business partner, and when I met him, one of his big things was flipping restaurants, right? So he would buy a business from, we were talking about earlier, real estate is often tied to the people, right? So if people are doing life, uh, the house is a blessing. If they're doing poorly, the house can be a curse, right? So the same thing is true of businesses, right? Joe Blow's hot dogs or, you know, Sal's Pizzeria or whatever it is, right? So when I met him, he was buying these restaurants from distressed sellers. He would run them, get them up and working well, and then he would sell them for so basically buying at wholesale and selling at a retail price. So we've been involved with businesses that are not franchises, but franchises. I'm a big fan of. We were talking about continuing education, right? One of my fears is always looking up, and I'm the guy who's still, running his business on a DOS computer system when everybody's got, iPhones, right? I always fear the competition kicking my butt because I'm not paying attention to technology, right? So franchises are really good for networking with people who are doing the exact same thing you're doing, but not in your market. Franchises are really good for continuing education, and they're really good for things that scale. So I'm a big fan of them because I'm not going to go pay to film a TV commercial, and it's just not going to be top notch, right? It's not cost effective for me to do certain forms of marketing, but I can go and be like, hey, I'm part of this franchise. Give me what kind of TV commercials you got. I'm going to run one. And then you're not paying for the production part. You're just paying for the actual airtime. So there's a lot of values in franchises for me. And one of the big ones is, you're not reinventing the wheel. I do not like the idea of putting all this time and energy into something and everybody else is like, oh, we've had that forever. You just reinvented this thing everybody on the planet has.
Right. Awesome. Awesome. Um, can you tell us about I don't know, maybe one of your biggest lessons learned either in franchising business or in real estate, like maybe something where you got stung financially and something that that maybe the listeners can learn from, avoid.
Um, I think there's a couple ones that, to me it's a combination of integrity and for investments is time, right? So in stocks they love to show you the compound interest and how that works and how your portfolio of reinvesting your earnings can grow astronomically quick. And that's I'm big on that. That's absolutely fantastic. But the other one is integrity, right? Um, we have a market of a few million people here, and it's a small community. Um, Names of bad investors come up, and you automatically go, "Well, I'm not going to buy. I don't care if the guy's selling the house for $1. I'm not buying from that guy." So um, and then the other side of the integrity coin is it's amazing how many deals have been brought to me just because people are know you're knowledgeable, reputable, and honest, and it pays dividends down the road. Like I can't tell you how many times I've had a conversation about somebody who's um, not honest, right? And I haven't seen them for years. And me and another investor are talking about this person, and the dishonest investor is never going to know that we're having this conversation, right? How many of those conversations are out there that that guy's never going to know about, right? So if you're dishonest, disloyal, it's going to hurt you for decades to come, right? But also, if you are honest and full of integrity, it's amazing how many conversations people have about you that are good and how many deals you see way down the road. So it literally pays dollars to just be a good person. And the markets, the community is never as large as you think it is, right?
Yeah, it's amazing how simple that concept sounds on the surface, but I've seen it over and over again when you start dealing with the finances of investing in real estate, flipping real estate, buying, selling, all of that stuff. Um, Working with contractors and so on and so forth. Um, I think the financial piece really brings out the worst in people sometimes, and then like you said, kind of that story um, lives on, and that's
Another aspect of business is that it's a team sport, right? Like my least favorite things in high school were here's a group project, and one person's going to do all the work, right? And in life, you get out there and you realize that if you sit in a corner by yourself, you're not gonna you're not gonna you're not gonna accomplish much, right? This is a team sport, right? You know, my lawyers on my team and agents on my team, the property managers on the team, everybody's on the team, and we're working together, right? And then you have friends, you develop partnerships, whether it's a deal or like a more long-term setup, it's a team sport, right? And man, I remember that being a shock when I was a kid because I was all about on my own. I was not into team anything, and that was a big lesson I had to learn.
Yeah, it's really interesting to see that because so many people come from the professional world, and they've got, it's their money and they're going to invest their money, and really not taking that team aspect to it because they want to buy, it's their property, it's their return, which is fine because all of that's true, but without a really good supporting cast behind you, um, not just being like a yes person saying, oh yeah, that's a good deal, that's a good deal, because you can find a line of agents that will go around a building that'll tell you that any real estate property is a good deal, but it may not necessarily be the case. Like you really want people that are going to be honest, have integrity with you on, even if it's a contractor, what it's actually going to cost. Not some contractor is going to give you a low bid and then come in trying to do change order bids and all of that type of stuff, or agents that say, oh yeah, it's a really good deal, and it's really not because you find out later that there was 20, 30, $40,000 of extra repairs that needed to be made in the property. It's so really having that team, like you said, is critically important.
Yeah. Yep.
So, um, is there anything else that you think that you'd like to share that you think the listeners would, really get a benefit from?
Um, I get asked, you know, if I was in somebody else's shoes, what would I focus on? And there's a line in real estate that everybody always says the best time to buy a house was yesterday. The next best to buy a house is today. And um, you know, we're in an unusual market right now, but the more I look at the data, the more it's proven true, right? It's everything from compound interest to the power of these low interest rates to the value of the dollar changing over years. It all says that, man, I wish I'd bought more yesterday.
Is there anything that you would like to share with the audience that you think they maybe be able to learn something from your decades of experience in business or in real estate?
Yeah, so interesting place in the market, and the interest rates are so low, and it almost feels like any house you buy right now is just going to be a phenomenal investment. And the more time that passes, the better it gets. Another aspect is this is actually a story I'm stealing from you, but I remember one time you met a guy and he bought a house in the 80s and couldn't sell it and just kept it as a rental. And now, decades later, he's like, this is the best investment I ever made. And my answer to those guys, I run into them every once in a while. My answer is imagine if you had one more. And that's always my answer, right? They're like, this is the best investment. What if you had made two or three or four?